In this week's episode of the Stock Scores Market Minutes, I will talk about the importance of trading the trend and how to do it. I will then do my regular weekly market analysis. We'll do some market scans on stock scores and then look at the trade of the week on CY. All right, so let's talk about trading the trend. First of all, what is a trend? Trends occur when there are consistently rising bottoms on the chart. That's an uptrend. When you have consistently falling tops on the chart, that is a downtrend. Now, chasing the trend is risky. We want to trade the trend at its boundaries. That's just a simpler and better way to do it. We want to buy the pullback to the upward trend line or short the pull-ups to the downward trend line. Now, of course, some of the best opportunities come when the trend reverses. Let's take a look at a chart of the S&P 500 over the past month just to drive this point home. Through the month of May, we have been in a downward trend for the most part. We had a little upward trend for maybe 2 days and then we resumed the downward trend. And so what we want to be doing in that situation is be a short seller at the top of the trend. Anytime price rallies to the upper boundary of that channel, we want to be a short seller. And it worked all but 1 day when the market actually broke through. When the market gets down to the bottom of the channel, it's very tempting to be a short seller because the market feels like it's at its very worst. The weakness is strong, but the reality is the market's likely to bounce at that level. And so you want to always look for the counter trend rally within the trend. And so what I mean by that is here in the downward trend, we have these little counter trend rallies, and that's when you want to be a short seller. So the longer term trend is down, but the short little trend is up. And that's what you want to take advantage of, is be a short seller when the market rallies for a little bit in the midst of a longer term downward trend. And you can switch all of that upside down for a market that's in an upward trend. And of course, you can apply this to individual stocks as well. All right, let's get into this week's market analysis, looking at the US markets to begin, as always. And you can see again that the market is in a downward trend, and therefore we want to favor short selling. But ideally, you want to do it when the market is not oversold, which is what it would be down here. You want to do it when the market's in a more neutral phase after it has rallied back a little bit. And you can see that happens a number of times. Until this downward trend line in the short term is broken to the upside, you should remain relatively bearish in the near term. However, we can look at the longer term chart, the weekly chart, and see that what simply has happened is we have had a very strong rally. We got to resistance and we got stuck. And it's pretty normal for a market to pull back in that scenario. Now, last week we had some pretty strong selling pressure. And you might remember from last week's Market Minutes video, I talked about the lack of enthusiastic selling, unlike we had back here, which telegraphed those more substantial corrections. So we have had that now. And I think it's important that we recognize that the sellers are getting a little more motivated, a little bit more panic starting to come in, and that could build. And so we want to get a little bit more cautious near term. Again, the market's already gone down for 5 weeks, and we are at some support from this previous trading range. So I'm not super confident that we're going to break lower, but I do want everyone to be conscious of the fact that there is some risk in the market right now. Moving along to the Russell 2000, and you can see that we have been in that little downward trend. This is a daily chart here. We tried to break out. We talked about that back at the start of May. The breakout really failed, went through support. And so since that time, the market for the small cap stocks has been weak and looks like it will continue to be weak until this little downward trend line can be broken. On to the Canadian markets. Here we have the TSX 60. You can see also here that the sellers are in control. We've got a downward trend line. We have falling tops. That means the sellers are in control. And until we can break that downward trend line and start to build rising bottoms, we should remain bearish of this market in the short term. But in the longer term, I'm still not ready to call it a bearish market scenario because it's pretty normal for a market that rallies into resistance to get stuck at resistance. And so I think that we could just bounce off of this and then maybe go sideways for a while. However, if instead we ultimately break down through this floor, maybe even a little bit lower, and the volume starts to pick up on the sell side, well, then we could get something more like what happened last fall, where we had a pretty substantial correction and something to keep an eye on there. TSX Venture, tends to slow down in May, and you're seeing that probably starting a little bit early this year. April, we saw the weakness start to gather. May, we've had weakness until this downward trend line can be broken. I think generally speaking, you avoid the small cap and micro cap stocks in Canada. There will be individual names that can do well, but the market in general is not too excited. On to the currency market. And this week I'm showing you the daily chart of the US dollar because I think it shows this cycle of trend that I talked about at the top of the video. And what you want to do with an upward trend is be a buyer at the bottom of the trend. And that's where we are approaching right now for the US dollar. We are in an upward trend. We don't want to be a buyer or be too bullish when the market is at the top of the channel. We want to think about being a buyer when it is at the bottom of the channel. And that's the time that it actually feels difficult because it feels like, okay, the bull is over, we're going to switch trend, all that kind of thing. But look at how often this market has bounced off of that trend line. Not quite at the trend line yet, but it is getting there. And so I expect the US dollar to bounce back soon. Canadian dollar, well, it's in a downward trend and it can't break that downward trend line. We've been talking about this for months. Until it can break the downward trend line, I would remain bearish of the Canadian dollar. On to interest rates, big move in the bond market last week. You can see the big spike there last week right through this resistance level, and that means that interest rates have dropped quite substantially in the last couple of weeks, and that's good for many things. Obviously good for people wanting to buy a house or buy a car on loan, that sort of thing, but it also has some negative effects. And I think in some ways what we're seeing here is money moving out of the stock market and looking for some safety as that downside momentum starts to build in stocks, people hiding out in the bond market. That means bond prices go up, interest rates go down. I think this is a little overbought right now. Here's your trend line. Probably it deserves to pull back near term, but it is still a bull market for bonds. Next up, commodities. And with that market uncertainty, we had a break of this little falling wedge pattern for gold. That's a bullish signal that happened last week, and I think we probably continue higher. Not a whole lot of upside. We'll get stuck at 126. And then again, more substantial resistance at 128 on the GLD. But this should help individual gold names, and we've seen it already. Some of the gold stocks started to perk up late last week as the market for gold went higher and as the market for stocks went lower. Looks like this, again, a bit of a hedge to that stock market weakness. Oil, as uncertainty builds globally, we've seen oil prices roll over. We had the upward trend line intact for a long time. We broke it, step one. We built a falling top, step two. And step three in a trend reversal was the breakdown from a falling top. That has happened, and this market looks like it will continue lower near term. It is getting a little overextended to the downside. If I draw my trend line, it looks something like that. And you see how far we are below it. So it wouldn't surprise me if we had a little sort of temporary bounce back. But I think generally speaking, you want to avoid oil and oil stocks right now because it is in the midst of a trend reversal from an upward trend to a downward trend. Finally, the fear chart. Not a lot of fear, but certainly more than we had in April. You can see that we've had this pickup in volatility in the month of May, and it demonstrates that investors are nervous. There's not panic in the market yet. That could change very quickly, but it feels like, you know, at a minimum, you want to be extra cautious with your stock market portfolio. So my ratings then, neutral long-term for both US and Canadian stocks, but bearish short-term. I've switched my ratings in the last 2 weeks from bearish to last week being neutral to this week being bullish on gold. That's a pretty fast reversal as the market has finally broken out of the complacency that it was in for a couple of months. Oil, bearish on both time frames. That, of course, a market that I was bullish on for many months, but we've now switched to bearish on both time frames for oil. The sellers continue to be in control of the stock market, but there is really no panic selling yet. And gold has broken its multi-month pullback, and it looks likely to continue the upward trend near term, although upside is somewhat limited. Money is flowing into bonds, perhaps for safety. Oil has broken its upward trend and should be avoided. Fear still low, but not really low. There is some concern among investors. All right, let's do our stocks to watch section. And in this section, I use the Stock Scores market scan to go in search of opportunity. So we're going to run the abnormal break scan this week. We'll do this on Canada and the US market. So I'll start with the Canadian market. It found 7 stocks very quickly, and I then go and inspect those charts. What I typically do here is I look at the daily chart first. If I think it has some promise, then I will look at the 3-year weekly chart. In the case of this stock, Argonaut Gold, it hasn't broken its downward trend line yet. And so although it is a gold stock and it has built a rising bottom, I think there's probably better names out there. So we'll continue along. This SMF is, I believe, also a gold stock, and it has broken from a nice cup and handle pattern on the weekly chart. You can see the resistance line there. This is the cup, this is the handle. We've broken through. It actually started that move late last week, but this looks pretty good to me. I think that SMF is a stock to consider. I would give this a 7 out of 10. Moving along, Kinross, don't particularly like that chart. Centerra, MAG. So there are some silver stocks that are showing some good patterns as well. This is a market that made a little flag pattern here. So we had an upward trend. We had this, what's called a flag, and now we're breaking from the flag. The concern I have is that there's fairly substantial horizontal resistance, just under $16, and that probably limits the upside. But I think if you're looking for a place to hide, some of these silver stocks are worth considering, although I wouldn't consider them if the market reverses and starts to strengthen. Endeavour Mining really hasn't broken its downward trend line yet, nor is that one a great chart pattern. All right, let's go take a look at this market scan on the US side. And so again, you have to be a Stock Scores member to do this, but once you are, you can run these scans. It saves you a ton of time, allows you to identify stocks making moves that you would otherwise miss. And so I'm going to cycle through these pretty quickly. I'm going to bring up this stock because it was one of the hot stocks of the day, made a very big move on heavy volume. You know, started the day at, I think, around 15, 17 cents, finished at 50, but traded much higher than that. The problem I have with this is that it's breaking up into a lot of pessimism. You can see the pessimism there. There's a lot of people that own this stock at higher prices, and I think that's why it really only showed strength at the start of the day, and then at the end of the day it kind of rolled over as people took some profit. I just think that there's an overhead supply of stock here that may limit its upside. So I don't particularly like this one a lot. It's moving up from a new low, not from a rising bottom, and so I would recommend it, or really give it a 5 or 6 rating out of 10. I'm going to just continue along, try to be fairly quick with this so that we don't do this all day here. So this stock broke its downward trend line late last week. It's getting the follow through now. I don't know that I would chase it here. I think if you caught GFI last week when it broke from its flag, that's good. You'd be up 11% already today. But now it's more of a hold if you managed to grab it last week. I'll just cycle through. I will now just pause at anything I think is worth considering or talking more about. Keep on moving here. Here's a gold trust, so another way to trade some of the gold stocks. But again, the issue I have is still below that downward trend line. That's going to be resistance, not a lot of upside to that level. There's the US listing of MAG Silver, MAG. Difference there is if you're Canadian, you're buying it in US dollars, so you're also speculating on the currency, which has actually been a good move the last little while, of course. So this stock breaking from a falling wedge, it did that again on Friday, so it's a little bit late, 1 day late. Probably gets up to 13.20 before it finds resistance. I don't know that I would buy it today, but if you happen to own it already, I think it's a good hold. Lots of silver. Cypress Semiconductor we're going to talk about in just a moment. Continue along here. AutoNation, I think this is an interesting chart as well. It was in this little pullback after an upward trend here, break of the pullback, and I think it could continue higher. However, it's not an awesome chart. I'd give it a 6 out of 10. And I think we got maybe one more page to go. So, the nice thing about this tool is you can go through thousands of stocks and ultimately only have to look through a small number of them that meet the criteria of the market scan, and you can really start to identify opportunities quickly that way. If you want more information about that, go to the trader training section of the Stock Scores website. You can learn more about being a member, or the membership page. It's all under the trader training menu here. All right, let's get on to the trade of the week. This week it is Cypress Semiconductor, and the reason I brought this up is today it was announced that the company is being bought by another, I believe at $23.85 a share or something like that. But what's interesting is that it started to behave abnormally on Wednesday of last week. You can see my little pink dots on the screen there. That's the Stock Scores Action Candle Indicator applied in TradeStation. It's my own indicator. It looks for, strong buying pressure, and in this case, it telegraphed that buyout. And what it demonstrates is that the stock market isn't fair, that there is always someone that knows about something before it is made public. The news came out today, big gap up on this buyout, but there was investors who were trading on that information a number of days ago. It's always interesting to see how that happens on these buyout and merger. All right, well, that has been the Stock Scores Market Minutes for June 3rd, 2019. Hope that you found it informative. If so, please click on the like button, subscribe to the channel, and most importantly, trade well.